We're going to walk you through the process, walk you through the steps on how to nail support and resistance levels. So let's not waste any time, team. Let's go ahead and dive into it. As always, we start with the basics and we work our way up. So what is support and resistance? So support, team, is a price level on the chart that is expected to have a strong demand of buyers. Think of support like the floor underneath you. It's what holds us up, right? If we jump up and down on our floor, it's holding us up. It's supporting us. So think of support like the floor underneath your feet right now. It's what's currently holding you up. All right, support simply is a price level on the chart that is expected to have a very strong demand of buyers. Resistance is a price level on the chart that is expected to have a strong demand of buyers. I think I completely messed that up. Give me 1 second. I apologize for absolutely butchering this. Sellers. There we go, Josh. Now we're on the right page. You guys are like, whoa, 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 whoa. Hold on here. I'm very confused now. Resistance is a price level on the chart that is expected to have a strong demand of sellers. There we go. Think of resistance like the ceiling above you. It is what holds you down if you jump up, right? Only if you jump up. You get on your chair, you jump up, your head hits the ceiling. Guess what? You fall back down. That's how we have to think of resistance, of like the ceiling above us. It's what's holding us down. Resistance is a price level on the chart that simply is expected to have a strong demand of sellers. I want you guys to always think about trading psychology. Buyers cause the price to move up, and sellers cause the price to move down. So if you know that there's going to be a strong demand of buyers at a certain price, we know buyers cause the price to move up. Okay? That's why support is support, because you have buyers there. Support is not a magical line on the chart that just holds up. The only reason support is support because there are buyers, a strong demand of buyers. And buyers cause the stock's price to move up. The only reason resistance is not because it's another magical line on the chart that just holds the stock down. It's because there's a strong demand of sellers at a certain price. And sellers cause the stock's price to move down. So always think of everything when we talk about trading. Always try and go back to the psychology aspect. Trading psychology. It's really going to allow things to make sense overall. Old support becomes new resistance. And old resistance becomes new support. What do I mean by that? Okay. So here's a little bit of an example. We can see here that this stock has resistance at this red line. Resistance is a strong demand of sellers. So when the stock comes up to that level of resistance, there's a lot of sellers. And what happens when there's sellers? The stock moves back down. Comes up to resistance. There's a lot of sellers. The stock moves back down. But when we can break through that level of resistance and we can break through that demand of sellers, right, we can move to the upside. And when we come back down to that old level of resistance, it will turn into new support. So the old ceiling turns into the new floor, and the complete opposite. If we lose a level of support is because there's a strong demand of buyers. So if we lose that strong level of support, the floor, we will crack and fall below it. And normally when we come back up to that old floor, it turns into the new ceiling. So old support, team, becomes new resistance. Old support, if we lose it, becomes new resistance. And old resistance, if we break above it, turns into new support. So why is identifying support and resistance important? So identifying support and resistance is extremely important because it allows us to identify where there is a strong demand of buyers and sellers. If we are looking to buy a stock, we want there to be a buyer. We want there to be buyers, right? We want to buy the stock. We want to buy the stock with the intention of it going up. And we know that the only reason why stocks go up is because there's buyers, correct? So if we're looking to buy a stock, we want there to be buyers so that the price moves higher. When we are looking to sell a stock, we need to know where the sellers are so we can get out before the stock starts to drop. Because again, sellers are what cause the stock to move lower. So if we're in a position and we want the stock's price to go up, we need to be able to identify where there is resistance, where there is a demand of sellers, so we can get out before those sellers start to sell and the stock starts to drop. Being able to identify key levels of support and resistance is very, very crucial to your success as a stock trader. It really is. Think about it, guys. Think about it. 10 cents is 10 cents. 20 cents is 20 cents. If you are not able to identify key levels of support and resistance, you may get in 50 cents too early. You may not get out at the best price and the stock starts to drop, giving up profits. But if you're able to identify key levels of support and resistance, you will be able to nail those entries closer to the penny. You will be able to sell your position close to the top because you know where there's a strong demand of buyers to be a buyer at as well, and where there's a strong demand of sellers to get out of that position to lock in your profits before it starts to drop. Think about it this way as well. If you had a 5,000 share position, 5,000 shares, what's 50 cents, team, of 5,000 shares? It's $2,500. So if you are not able to identify that key level of support, you may get in 50 cents too early. And the stock may come down and you're down $2,500. But if you're able to identify these levels, you may be able to identify $4, not $4.50, and wait to buy until there's other buyers there as well. Because again, 10 cents, 20 cents, 30 cents, team, as day traders, that means a lot. On 1,000 shares, 5,000 shares, 10,000 shares, 10 cents can make a difference. So we need to be able to identify these key levels of support and resistance. So how do we identify levels of support and resistance on a chart? Well, there's multiple ways to identify levels of support and resistance. We have what we call psychological levels of support and resistance. We can utilize indicators, right? There's many indicators that we use as traders, and these indicators can be used as levels of support and resistance. There are trading tools that we use. Remember, tools are different than indicators. So there are going to be trading tools that we can use to identify levels of support and resistance. And the most important one, in my opinion, are prior levels of support and resistance, right? Looking back into the past. What's the saying? History likes to repeat itself. So the most important way to identify levels of support and resistance are being able to identify prior levels of support and resistance. Let's break these down one by one by one. So psychological levels, guys, right? So psychological levels are levels of support and resistance. So we have a few. We have every whole dollar, we have every half dollar, and every quarter dollar is a psychological level of support and resistance. So $2 is a whole dollar. That's a psychological level. $2.50, that's every 50 cents. That's half of a dollar, right? That's a psychological level. And every quarter, 25 cents, 50, 75 cents, whole. Every quarter is a psychological level of support and resistance. Whole dollars, 1, 2, 3, 4, 5, 6, are the strongest. Half dollars, $1.50, $2, $2.50, $3, $3.50, $4 are the second strongest. And every quarter, 25, 50, 75, $1. 25, 50, 75, $1. Every quarter are the third strongest levels of psychological support and resistance. But with penny stocks, we need to know this, guys. With penny stocks, we have three even stronger psychological levels of support and resistance. And this honestly bleeds in to larger cap stocks as well. But with penny stocks, we have three levels that we need to be even more mindful of and really take into consideration because they're very strong. You have $1 being the strongest level of support and resistance for penny stocks, $5 being the second, $10 being the third. And then it's every 10, 20, 30, 40, and then $50 is a very strong level. Then it's 60, 70, 80, 90, 100 is another strong level. Then it's 150, and then 200, 253, 354, 450, 500 being a very strong psychological level, all the way up to $1,000. Have you ever guys seen a stock break $1? A penny stock break $1, and it just rips $4, $5, $6 to the upside. Why is that? Because traders know that the $1 level for penny stocks is extremely strong. And most of the time, when a stock comes up to $1, it falls. Comes up to $1 and falls. But if a penny stock ever breaks $1, that's when we see big time breakouts. Same thing with $5, same thing with $10. And it's the same thing as support. Right? You ever seen a stock come down from $2 all the way down to $1 and have a really strong bounce? Well, $1 is a very strong psychological level for penny stocks as support resistance. $5 being the second strongest and $10 being the third strongest. One thing that is not on this lesson that I do want to point out is with penny stocks, I've noticed over my career that $8.75 is another psychological level of support and resistance. How many times have you seen a stock shoot right up to $8.75 and then get rejected? But there's no other reason for resistance. No other reason. It just goes to $8.75 and it falls. Why? It's another odd, right? It's odd, but it's another level of psychological resistance and support. How many times have you seen a stock fall down to $8.75 and bounce? And you're like, why? There was no reason. Why $8.75? It's another very strong, right, psychological level of support and resistance. So we do have those, we call them mental levels. You can call them mental levels, right? Psychological levels. Every whole dollar, half dollar, and quarter dollar. And then with penny stocks, we have $1 being very strong, $5 being the second, $10 being the third, and now we need to add in $8.75 as the fourth very strong psychological level of support and resistance with penny stocks. Now we're talking like large cap stocks. You got $100, $150, $200, right? Those big main whole numbers. $500, $1,000, $2,000, okay? For those larger cap stocks. So those are psychological levels, those mind levels, those mindset levels, whatever you want to call them. The next way we can identify support and resistance is with indicators, right? You guys know the VWAP, EMAs, which are exponential moving averages, and SMAs, which are simple moving averages. How many times have you seen a stock come down to the VWAP, the volume weighted average price, and bounce? I've seen it a lot. How many times have you seen a stock grind the 9 EMA on a 5-minute chart all day and just come down to the 9 EMA and bounce, down to the 9 EMA and bounce, down to the 9 EMA and bounce? How many times have you seen a stock on the daily chart come down to the 200 SMA and bounce or the 50 SMA and bounce? A lot of times. Go back on the SPY on a daily chart, the S&P 500, ticker SPY. Look at the daily chart and add a 50 SMA, a very popular indicator on the daily chart. Go back to 2021. Look at how many times the SPY came down to the 50 SMA and bounced, to the 50 SMA and bounced. Over 7 times that took place in 2021. So indicators are another way that we can identify strong and key levels of support and resistance. And the most popular indicators to do so are going to be the VWAP, which we use intraday, 1 minute, 5 minute, 15-minute timeframes. The EMAs that we use on our intraday timeframes and daily. And then SMAs, simple moving averages, that we use on our daily timeframes. The three most popular indicators that traders utilize to identify levels of support and resistance. We also have trading tools, right? So trading tools are different than indicators. So what's a trading tool? Well, a trend line, right? A trend line is a trading tool, correct? And a Fibonacci is a trading tool. Indicators are pre-populated on the chart. Now, don't get me wrong. You can pre-populate fibs with a script. You can pre-populate trend lines with a script, okay? But indicators are VWAP, EMA, SMA, RSI, MACD. Those are indicators. And then we have tools that we use in our toolbox on our broker. And what tools are in there? We got fibs, Fibonacci spirals, right? All kinds of crazy stuff. But the most popular trading tools that we can use as traders to identify key levels of support and resistance, they're going to be trend lines. We have uptrends and we have downtrends. An uptrend, we connect off the lows. A downtrend, we connect off the highs. And then we have fibs. We have Fibonacci retracements that we've talked about before in the past. If you guys want to check out that lesson, it's in the video lessons library. And then we have Fibonacci extensions. Same thing. We have that lesson in the video lessons library. So we have trading tools. The two most popular are going to be trend lines and fibs, Fibonacci retracements and Fibonacci extensions, to identify these key strong levels of support and resistance. And then the most important, in my opinion, is going to be past chart history. How many times have you heard me say, look left, just look left, right? When you look left on a stock chart, what are you doing? You're looking back into the past chart history. The further back you go, the more conviction you have. Don't go back a year or 2 years, go back 10 years, go back 20 years. Look left. So in my opinion, one of the most important ways to identify a key level of support and resistance is past chart history. What's happened in the past? Because history likes to repeat itself. Simply look left. If you're on a 1 minute chart, a 5 minute chart, a daily, weekly, or monthly, just look left. Remember, old support becomes new resistance. Old resistance becomes new support. Look at this image I have in the background. Old resistance becomes new support, right? Old resistance becomes new support. Old resistance becomes new support, becomes new support. So always look left. That's how you're going to be able to identify those levels of support and resistance. Look left. Old resistance comes new support. Okay. So I'm sure you guys are asking, like, all right, cool. Right? I know what support and resistance is. Right? I know why it's important, Josh. I learned something new today, right? I learned about prior levels, maybe some trading tools, psychological levels, right? I learned a lot here. But my question to you, Josh, is how do you identify these levels? How do you identify these really great levels of support and resistance? So over time, team, I've perfected my ability to identify the best levels of support and resistance. It's simply no shock that 70 to 80% of the levels that I identify are respected nearly to the penny, right to the penny, give or take a couple cents. So how do I do it? Number one, it came in time. I want to throw that out there. Over time, I perfected this. I didn't get good at it the first day. I didn't get good at it the first week or the first month. I've been trading for a long time. I think 7 years is a long time. Going 8 years, man, I don't even remember. Time flies by. It's a very long time. I wasn't good at it the first 6 months, the first year. I was still perfecting this my second year and my third year. But over time, I found a unique way that works for me to identify the best levels of support and resistance. And again, a lot of traders are shocked. They're like, dude, how did you nail that to the penny? How did you know? So there's a couple things. Number one, I look for the price area that has been hit as many times as possible. Some traders look at upper shadows. Some traders look at candle bodies. Some traders only look at the 1 minute time frame, right? Some traders only look at a daily time frame. I'm looking at everything. I'm looking for the price area, not just one time, but the price area that has been hit many times as possible. I'm not just looking at upper shadows or the candle closes. I'm just not looking at the 1 minute chart or the 5 minute chart. I look at everything, every time frame, every indicator, tools, psychological, past chart history, everything, every time frame, every upper shadow, every close, everything. That's how I'm able to identify the price area that has the highest probability of being the strongest level of support and resistance. I try to find as many separate reasons as possible to identify the best levels of support and resistance. Just like when trading, guys, we need to have multiple separate reasons to take a trade. We're not just going to take a trade because the stock's at the VWAP or the 9 EMA or a fib level. We want to have separate reasons. We want there to be a fib level there to validate. We want there to be a trend line in the VWAP, right? And a psychological level. We want multiple separate reasons to take a trade. So I applied that mindset to I need as many multiple separate reasons as possible to identify the absolute best levels of support and resistance. So I'm going to show you guys some examples of how I'm identifying the best levels of support and resistance. And I'm going to whim this, right? What better way to not go find the best example, but to go into a real life chart, a chart that's moving right now to say, this is what I see and here's why. That's the best learning example, in my opinion. So we're going to do that. But before we do that, quick recap. What's support and resistance? Support is like the floor underneath you. It's what holds you up. Resistance is like the ceiling above you. It's what holds you down. It's hard to get through that ceiling. If you jump up, you're going to hit your head. You're going to fall back down to the floor, right? Buyers cause the stock's price to move up, and sellers are causing the stock's price to move down. It's all psychology, right? The only reason a stock goes up is because there's buyers, and the reason why stocks go down is because there's sellers. Old support becomes new resistance, and old resistance becomes new support. We know why it's important to identify these levels, okay? We now know that there's many different ways to identify these levels of support and resistance. You have psychological levels. You can use indicators, trading tools, and then prior levels, past chart history, looking left, okay? And you guys know how I identify my levels. I try to find as many separate reasons as possible, using as many indicators, tools, prior levels from the past, psychological levels, using all of these levels and applying them in conjunction with one another to get my levels. And by doing that over the years, I've seen great success, right? Like I used to be shocked. I'm not shocked anymore when the stock comes down to a certain price to the penny and bounces. It doesn't surprise me because again, I feel like I've kind of perfected my ability to identify these levels. And this is how I've perfected my ability to do so. I look at every time frame. I look at every reason, psychological, indicators, trading tools, past chart history, and I try and find the price area, right, that has been hit as many times as possible. Not just the upper shadow, not just the candle, but everything. All right, so let's go grab an example real quick from today. Since we're on the SPY, you guys just want to use the SPY, or how about this? Let's make this like an engaging, interactive lesson. Okay? What stock do you want me to do analysis on? Right? What stock? You want me to do a penny stock? You want me to do a large cap stock? I know we primarily trade pennies. You want me to go grab a penny stock and how I'm identifying certain levels of support and resistance? You guys give me a stock, and I'll be more than happy to dive into it for the second part of our lesson. And that's me showing you what I do, how I go about my levels, from time frames to areas to everything. And then I'm going to challenge you guys, right? I'm going to challenge you guys. We're going to grab a ticker off to the side. I'm going to mark up my levels of support and resistance, and I'm going to have you guys go mark up your levels of support and resistance. And I want to see if your guys' levels are where my levels are. Okay? So I got AMD. Catherine was first. Let's go look at AMD. So let's say I come into my day. Okay? I come into my day, and I'm like, AMD, where can we go today? What could happen? Where could we bounce? Where could we hit resistance? Where could we sell off? I start with my daily chart. So the first thing I do, guys, I go right into the daily chart. I just start looking. I'm trying to find as many separate reasons as possible. Remember, indicators, psychological levels, okay? Trading tools. It could be a trend line. I'm trying to find as many separate reasons as possible. So let's go ahead and dive into AMD. And if you guys want, go ahead and do this with me. I may be quiet for a second because I'm going to go through and really hone in on these levels. You guys do the same thing, and let's see if we can identify the same levels. Okay, so let's go ahead and do it. AMD, I know that old resistance turns in to new support. The first thing that I see is right here at 108.42. Why? Why 108.42? 108.54. Why? I see resistance. I see a breakout. I see the stock hit resistance and failed. Then boom, it broke out. So I know that old resistance turns into new support. What's something else that falls right at 108.54? Right around the same area. This red line on my chart is a 200 SMA. It's an indicator. One of the most popular indicators. For support and resistance on the daily chart. So right off the bat, I can see we have our 200-day moving average right around 108.50, and we have prior resistance right around 108.50. I can also see we had a little bit of support right here. Look at all these closures. Remember, I'm taking everything into consideration, not just upper shadows, not lower shadows. I'm looking at candle closures. I'm looking at everything, right? Resistance. Tried to break above, we lost it. The next day, we confirmed resistance. Tried to get above, we lost it. Resistance. We broke above, old resistance, support. Is that a coincidence? Look, we fall back below support, resistance. We broke above. So now, if we come back down to this 108.54, what do you think's going to happen? Well, it was a level that was hit several times as support and resistance from past chart history, right? Looking left, the further back I go, the more conviction I have. Well, that's the highest the stock's ever been. So that's all I can do is look back here. But now I can also apply those levels with this 200-day moving average. So I found multiple reasons. Upper shadows, lower shadows. Candle closes, candle opens several times. And it lines up with our 200-day moving average. So right here, I'm going to say 108.50-ish, 108.54. Maybe draw that up just a little bit. 108.58, 108.60. Right around this level is going to be a good level of support as we're coming down to it. It's our floor. I can expect there to be a demand of buyers at this price. If there's a demand of buyers at this price, what's going to happen? Right? There's going to be buyers. The stock may move up, right? Throwing something else in there, a curveball, is if you're short on AMD, if you're short right now and you're coming into support, what are you thinking? There's buyers. So what are you going to do? You're going to cover your position. What happens when you cover your position? It creates a buy order. So not only do you have buyers waiting to buy here, but you may have shorts here. Look, I guarantee there's shorts in this stock. Look at how nasty red this is. I would short this stock. And if I was short this stock, I need to know where there's buyers. Where do I think there's a demand of buyers? 108.58. What am I going to do around that level? I'm going to cover my short position. And what happens when I cover my short position? It creates a buy order. What happens when there's buy orders? Stock moves up. Okay, we can look at this so many different ways, so many different angles, but it all comes back to psychology. Okay, so again, we just did the daily chart. All right, cool. Going to go into a 4-hour. Going to go to a 4-hour and try and fine tune my levels. I'm just going to try and fine tune it. I can see, wow, there's a good amount of resistance, a lot of support resistance. Okay, I'm feeling pretty good about that level. Right? Let's go into a 1-hour chart. Still want to fine tune it a little bit. I'd have to open this up a little bit more and go back, probably 90 days, give or take. But I want to go back and I really want to fine tune these levels. And I can see that, dang, this is a pretty good level here. Right? I'm feeling pretty good about that level of support. And I will do the same thing over and over and over until I get into my lower time frames. Now, I have a daily time frame level right here. So I know right now, based on the daily chart, 4-hour, 1-hour, that's a pretty good area. So if we come down to 108.58, we should probably see a little bit of a bounce. Let's take it a next step further, right? Let's do some intraday levels of support and resistance, right? Do some intraday levels of support and resistance. Again, I like to look left, right? I like to look left. So when I look left, I see all of this support right here. All right, look at all that support. We came down and bounced, 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 bounced. That was on Friday. We bounced, we lost it. What did we do in pre-market? Old support turned into new resistance. We fell. Pushed back up. Where did we push back up to? We had post-market support, right? We had that post-market support, bounced off of it into an old level of support, held as new resistance. We dropped. We lost that floor, right? We lost that floor of support. Old support turns into new resistance. What did we do? We came up, boom, resistance. Boom, resistance. We fell, right? We had support here. We had support. We pushed off of support here, right? We had bounce, bounce, bounce. Whoop, we pushed. We lost it. Old support turns into new resistance. What happened here at 10:55? To the penny, ding! We hit that level of resistance. Again, I want to find as many separate reasons as possible. So we can use tools. So let's run a downtrend. Right now we have a cool little downtrend we could run right here. Okay, look at this. Downtrend, downtrend. So at this point in time, we have a downtrend. We can connect it. So you could literally do this. Let's remove that drawing. We can go from this shadow to that upper shadow, right click this and extend it to the right. All right, we can do that. We can see that we have this downtrend, downtrend. One touch, two touch. We have old support, new resistance. So right around 113.73 could be a good level of resistance. Why? Well, it's old support, new resistance, and we have this downtrend. That could be resistance as well. What takes place? We come up to the downtrend and we get rejected. We also come up to that old level of support and we hit it to the penny and we got rejected. So we can see that we're utilizing as many separate reasons as possible to gauge our levels of support and resistance. And look what's happening. We came to this downtrend, we're falling. Came to the downtrend, we're falling. Where are we headed to next? Well, that daily level that we just drawn up, 108.58, for many separate reasons. So now we have this downtrend that we could utilize, right? We have the downtrend. We have some indicators. We have some indicators, right? We have a 9 EMA. Look at the 9 EMA, guys. We lost the 9 EMA. What happened? We hit it. We got rejected. We tried to bounce back up. We hit it. We got rejected. You see that blue line is my 9 EMA. Why in the world did that 9 EMA hold down? Because old support is new resistance. 9 EMA support, 9 EMA support. We lost it. Old support turns into new resistance. 9 EMA resistance, 9 EMA resistance. Okay? We broke above it. 9 EMA resistance turns into what happened right there. 9 EMA support, 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 support. We lost it. Crack. What happens? Old support turns into new resistance, 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 resistance. Just by using one indicator. One indicator, the 9 EMA. And we could see how many times that one indicator has been honored. But again, that's not enough. We want downtrends. We want past levels, past chart. We want psychological levels, right? We want to mix all of these in. I want to come back at the end of the lesson and see where AMD is. I want to come back here in the next 10 minutes and see where AMD is at and see exactly what it's going to do around this 108.50. That was a good level that I believe we've identified at this point in time. So another stock, let's go do a penny stock, right? Let's go grab a penny stock. And I'm just going to pick a random one, PIXY. Boom. Clear this out. Boom and boom. Cool. So this morning, right, we were looking at PIXY. I said, okay, first things first, we need to dive into our daily chart and we need to mark up our levels of support and resistance, right? So the first thing I'm going to do, I'm going to look at some indicators. Okay, we got a 200-day moving average right around 165. I know the 200-day moving average is pretty strong. Okay, so there's an indicator. There's a reason for 165. Wow, look at that. Came down and bounced at 165. Came down and bounced at 165. Bounced at 165. Cracked it. So we have 3 times in the past, 165 was support. We come over here and we can see that we had resistance on the 19th, very close to that candle close from the 19th of January. And it's our 200-day moving average. All right, cool. 165 is a pretty good level, right? 165 is not a bad looking level. So we see that level of resistance. When we look at pre-market, what happened when the price was around 165? It got rejected. It fell. Because traders see that as resistance. All right, we break 165. How much higher can we go? Again, I need to find as many separate reasons as possible. As many separate reasons as possible. So I'm going to look at candle closures and shadows. Okay, so I'm going to go back over here and I see, okay, we bounced here right around 170. We bounced at 170. We bounced at 170. We tried to bounce right around 170. And when we lost 170, the very next day we popped up. We can see that shadow right there. We lost 170 right there. And the very next day, the high a day was 170. So we see that we tried the hold. We tried the hold. We held. We held. We held. We lost it. Old support turned into new resistance. Trying to find many separate reasons. Trying to find as many separate reasons. Oh, wow. Look at that. It was our open from the 29th of December. The open. Okay. Do we have any other reasons? Well, not really. 170. What happens around 170 today? So again, we have 2 levels right now. Just so you know, we have 2 levels, 165, 170. We see 165 and that 170 level respected. Now we're doing the same thing. Got that upper shadow right around 175. Oh, wow. Whoa, what's 175? Psychological, right? It's a quarter, right? 25, 75, 25, 75, right? So high a day, right? The high a day from the 29th, that spiking high, that upper shadow, and it's a psychological number. All right, cool. Whoa, whoa, wow, look at that. It was the close, the high a day from the 25th. Wow, so I got one reason here, two reasons here. What else? I got psychological level as well. Oh, wow. Coincident. Look at how many times 175 was honored. 1, 2, 3, 4, 5, 6, 7, 8, 9 times. 9 times through this area. It's a psychological level. It's a close. And it's a spiking high. So we're marking up levels. What's next, right? We don't even know this candle's here. What's next? We have this spiking high, 183, right? Okay, cool, 183. Is there any separate reasons around 183? All right, lower shadow, spiked up, spiked up, spiked up, spiked up, spiked up. We can see that that was a price area where there was a lot of shares traded. There was a lot of action, right? We have a lot of upper shadows that drop back below, and we have candle bodies, candle body, upper shadow, candle body, upper shadow, right? We can see that 183 was a pretty decent level as well. And what does that line up with? Lines up with last week's spiking high, 183. So we have a couple key levels. You guys are like, but Josh, dude, you got 170, 165, 170, 175, 183. These are levels we got to be mindful of, guys, right? We got to be mindful. If you're in at 150, right, where do you want to take some profit? 165. Why? Because 165 is a level. What if it falls? What if it never makes it to 175? You're going to be really mad you didn't take profit at 165, correct? So again, you have 165. That's a level to be mindful of. Maybe you lock in some profits, and it's the 200-day moving average, okay? You got 170, 175, 183, all coming from the daily chart. And then you have that spiking high up towards around 193, right? How did it play out today? Let's actually put this in a 1 minute. Make it easier. Okay, so we're starting our day. And we have these levels drawn up. So we know if we're in the stock, we should look to see what the price does down around 165. If we see sellers, what do we need to do? Take profit. Right? If we push through that level and we see sellers at 170, what do we need to do? Take some profit. So let's see how it works when we open. And we are live. All right? Stock's pushing up, 165, 170, 170. Look at that. It came up to 170, got rejected. Came up to 170, got rejected. Came up to 170, got rejected. Everybody's like, how did you know 170 over 165? Come from the daily chart. These levels, just so you guys know, the levels that we just drew, we didn't get these from intraday, right? We did not do that here on our 1 minute time frame or 5 minute. All of these levels that we just picked came right from the daily chart, not the 4 hour or even the 1 hour. And I do that. But that's the thing. I did not grab any level. I only grabbed one from the daily chart. And look at this. Comes up to 165. It comes down and holds 165 as support. 170 resistance. 165 support. 170 resistance. 165 support. Why is it doing that? Because these are past chart levels. Right? These are psychological levels. These are levels from indicators. Grabbing a conjunction, multiple separate reasons. So we knew 165 was a level. We knew 170 was a level. Here's the thing. We broke 165 resistance. Old resistance becomes what? New support. Boom. Support, 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 support. Now we have 170 resistance deriving or coming from our daily chart. We break above, right up to 174. Boom! Broke up to 182. Oh my goodness. A penny away. A penny away. Right? 182 was the high. Okay, cool. So here's what we look at. Well, we knew 183 was a level, right? So we were taking profits near that level because we know there's going to be sellers. What happened? What happened? Wow, there were some sellers. We knew there was going to be a strong demand of sellers at this level because we found this level on the daily chart. Multiple separate reasons. Come up, 182, very close to 183. We get rejected. Where did we come right back down to before we stopped? 170, right? We're below it. Where are we pulling back to? And we just dumped on off. We can see here how these prices have been honored multiple times, right? We see here right around 170, we had resistance. We broke 170, 185. We came back down to 170. Came back down to 165. We held for a little bit. What happened when we cracked 165? It was resistance. It was resistance. Do you see how these levels from the daily chart are not perfect. Nothing's perfect, but you see how they were honored. Right out of the gate, 165 resistance turns into support. 170 resistance, it breaks above, right to 183, a level that we gained from the daily chart. Falling all the way back down, comes up to 170, right? 165, 175, 165, 165, 165. We never got these levels from a 1 minute chart, from a 5 minute chart, from a 30-minute chart. They were all simply from the daily. So we could always take it a next step further, and I highly recommend that. Start with your daily time frame. Find as many separate reasons as possible. Again, what separate reasons can you use to identify a potential key level of support and resistance? You have psychological levels. 1 second, I'm going to sneeze. All right. Sorry, guys, I sneezed. Woo! All right. So you have psychological levels, and we had a couple of those. We had 175, correct? Indicators, what do we have? We had the 200 SMA. Trading tools, we didn't utilize any trading tools. We didn't have any downtrends, uptrends, or fibs, but we had a lot of prior levels. So we were able to use psychological levels on PIXY. We were able to use indicators, and we were able to use prior levels. We were able to use 3 out of the 4 to identify levels of support and resistance. Again, multiple separate reasons. And we did. We had a lot of psychological. We had indicators, right? We had our 200-day moving average. We had past chart history, going back and looking at how many times a certain price had been hit in the past, which really makes these levels stronger, right? The more times a level has been hit, the stronger it is. The more times a level has been hit, and when it breaks out, the stronger the breakout is. So we used 3 of those forms, and we found multiple separate reasons and multiple separate prices. And we could see how those levels, a good majority of them, I would say 70% of those levels were honored pretty much to the T. 165 was honored to the T, 170, right? 182, 170, 175, 165 was the best, right? We had support, resistance. So again, it's never 100% of the time. But by doing this over and over and over and over again, without fail, okay, you will learn to master what we just did. Now, PIXY maybe wasn't the best example, but I'd rather give you a really, really bad example than the best example in the world. Because if I just give you the best example in the world, you're going to think it's easy. And when you find a stock like PIXY, you're like, man, this is hard. Let's do a hard one. Master the hard ones. So when you find an easy one, you're like, that's cake. That's butter, right? So again, there was an example on PIXY, and we can see how those levels were honored. And it's going to take time. You're going to have to do it over and over and over again. It's repetition. Practice makes perfect. And the more you do this, the more you're going to be confident and comfortable with these levels that you're picking and choosing. That's how we identify price targets to the upside. That's how we identify where we want to be a buyer. Look at this level, for example. Intraday, we had pre-market resistance, 153, 153, 153, 153. Very strong resistance. When we broke over strong resistance, we broke out, all the way to 182. That was the level we identified. We dumped all the way back down to 153. What did we do? We bounced. Where? 170, 175. So again, if you're going to take anything away from this lesson, anything whatsoever, and I would put the most emphasis here in the beginning as you're identifying support and resistance. What would you guys think I would say? Which one of these 4 should you put the most amount of focus on? Should you put a lot of focus on psychological levels, indicators, trading tools, or prior levels? If I said master one of these guys, which one would I tell you to master first? What do you guys think? It's King saying prior. Angel saying prior. Steve saying 4. You're right. Psychological is easy, guys. 1, 2, 3, 4, 5. 125, 150. They're easy, right? It's bing. That's psychological. That's not hard to master. Indicators, VWAP, SMAs. They're there. They're there, right? The 200-day moving average is the 200-day moving average at 165. It's just, that's the price. That's it. That's easy. Put an indicator on your chart, and you know, hey, this is an indicator that could be support and resistance. Pretty easy stuff. Trading tools, trend lines. The trend line is the trend line once you connect it, like that, right? Right? The trend line's the trend line. That was pretty easy to draw it. But the hardest part for me, and I think the hardest part for newer traders, is identifying prior levels, okay? Because there's a lot of noise, right? There's a lot of noise on this chart. Look at all these upper shadows. Look at all these candle bodies. Look at all this noise. How do you really pick the best of the best of the best level out of this noise? You find a price area, okay? Not just a wick, not just a tail, not just an upper shadow, not just a lower shadow, not candle bodies, not just candle closes. Everything. Wicks, tails, upper shadows, lower shadows. Use as many as you can. And that's how we were able to identify that level. And I can mark them up really fast, guys, right? I can see bounce, 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 bounce. Rejection, rejection, rejection. Boom, I like it. Boom, right there. Rejection, bounce, bounce, bounce. Rejection, I like it. I love it. Spiking high, 182. Resistance, a lot of resistance, boom. I can sit here and be like, all right, cool. So I know these levels. Boom, I can mark up that 192. I'm looking left, right? Boom, 197, $2, psychological. And I can go through here with ease, mark up these levels because they just stand out to me. Why did I just mark up 237 just like that? Because it stood out to me. Why? Bounce, 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 resistance, resistance. 237. Scroll back. Oh, wow, that's not a coincidence. It was support. It was resistance. It's really not a coincidence. So the more you do what I just did, the more you'll be in here just going, pow, resistance, pow, resistance. You'll be looking back like, all right, let's make an adjustment. Pow, resistance, pow, resistance. And you'll look back and be like, wow, these are lining up pretty darn good. So if I say master anything, guys, it's really starting with the daily chart, number one, right? We always start with daily charts. The higher the time frame, the better. And look for those prior levels. Start with your highest time frame, okay? And work your way all the way down to your lowest time frame. Start with marking up the levels that you think are the best on I start with daily. I don't go weekly and monthly. Do what you want, but I go daily, 4 hour, 1 hour, 30 minute, 15 minute. I'm always looking left. I'm always making these little teeny adjustments, maybe a couple pennies, maybe a little bit, little adjustments. I'm really trying to perfect it. And I'm like, all right, let's whip out those trading tools. We'll have a trading tool that lines up with one of these levels. Let's bring out some indicators. Do I have an indicator that lines up with one of these levels? Because again, the trading tools are easy. Indicators are easy. Psychological levels are easy, right? Do any of these three right here line up with one of these? If so, you're making that level stronger. That level is stronger. If you have an indicator at 4, a prior level at 4, and a trading tool, a trend line at 4, what's a strong level? 4, and it's psychological. So $4. You have all of these lining up in the same place. But first, it's identifying, is $4 a strong prior level? Because I think, from my experience, prior levels trump these other ones. Prior levels are the strongest always, but when you can get them to match up in conjunction with these other 3 that we talked about, you're going to start mastering your levels of support and your levels of. So again, find yourself a price area, an area in the price that you see has been support and resistance a lot. It doesn't always have to be to the penny, right? It doesn't have to be always to the penny. Like this level, 168, wasn't to the penny every time, right? It came down to 164 that day. But I see it was around that price. I can see here it was to the penny, to the penny. Not to the penny, but I see a bounce. I see a close. I see a rejection. Right around that price area. 168. Let's go closer. Okay, I see there was the opened it that day. So I'm just making adjustments. I'm like, all right, so let me bring that up to like 169. Let's go back. 169, 169, 169, 69. Okay, cool. 169. So 169 is still good. 170 is good. Right around that level. I think that's a good level, right? Wasn't to the penny. Wasn't to the penny, but I can see that price area, right? 169 to 170 was a good level. And I can see quite a few times where it was to the penny. And so I'm like, all right, 170 it is. What happens out of the gate? 170 resistance several times before it broke out. It wasn't a coincidence that 170 was resistance after this big initial move to the upside. It's simply because that was a level traders identified from the daily chart. Okay, so I know that was a lot, about 57 minutes. But again, I want to make sure I'm very thorough with our lessons. What is the furthest level you go back to and why? I go back as far as possible, Angel. And why? It gives you more conviction. The further back you go, and that one level you find from 30 years ago, you're just more convicted, right? Don't go back just 30 days. Don't go back 60 days or a year. Go back 10 years, 20 years, 30 years. And if you can identify prices that line up with prices from 30 years ago, don't you have a little bit more conviction? Like, oh, wow. I mean, that price was honored like in 1988, 2002, 2018, being honored today, intraday. Like, yeah, I'm convicted that this is a freaking price level that traders are respecting. So again, go back as far as you can. Further, the better. And the reason why is it gives you more conviction. And like I said, team, don't expect to master this today. Don't expect to master this next week. All I want you guys doing is letting this all sink in. Everything. Let it all sink in and just apply it. Apply it. You guys know psychological levels. You guys know indicators and why we use the ones we use and how they're support and resistance. We had a few examples here today. You guys know tools, Fibonacci retracements, Fibonacci extensions, trend lines, right? You guys are good with these things, right? We can draw trend lines really well. We can draw fibs. We've had a great couple fib lessons. We have them in the video lessons library if you want to refresh yourself. We know the indicators that we use and why and how we use them. So we can identify support and resistance on these indicators. They're populating the levels for us and psychological levels. Master identifying these prior levels. Again, do this for a week, a month, 2 months straight. What's going to happen is you're going to come into your morning and you're going to start marking up these levels. And you're going to start seeing levels that were not honored. It may have been 5 cents off, 10 cents off. And the first thing I know you're going to do is, why was it 10 cents off? You're going to go back and look. Okay, so I had 189 drawn up, but it hit 182. Did I do something wrong? And you're going to look. Okay, so it hit 182, but I was thinking 190. Why did it hit 182 and not 190? You're going to start re-looking at the chart, making adjustments. Ah, that makes sense. Okay. All right, so I see why I could have brought this level down just a little bit more because it lines up with more points on the chart. Okay. That's what's going to happen. You're going to come in and you got to just do this and apply this and take the initiative and mark up these levels. And you're not going to be right 100% of the time. I'm not even right 100% of the time, right? But what you're going to be able to do is learn from it. You're going to see the day move on. You're going to go back at the end of the day, and you're going to readjust your levels to see why levels were hit the way they were hit. You're like, wow, this level was hit to the penny. I drew it up. I feel great. Why? This is why. Keep doing that, Angel. Keep doing that. Or why was I 10 cents off on this one? It's a larger cap stock. Why was I 50 cents off on this one? And you're going to go back at the end of the day, and you're going to be like, all right, why was I 50 cents off? Ah, this makes sense. Okay. That was the lower shadow. That was the high. And that was closer to the moving average. Okay, I see what I did. I could do different for the next time. So what are you going to do? You're going to get yourself a little sticky note. You're going to write it down, and you're going to apply that tomorrow. You're going to apply it, and apply it, and apply it, and apply it. And before you know it, you're going to be the master at support and resistance. And again, you're going to be the one out here calling dip buys to the penny, calling resistance levels, sell targets to the penny. All right? And last but not least, I'm done talking, I promise, is Use everything. Everything. Not just one, not just two, everything. Every time frame, every indicator that we use, right? Go back as far as you can. Handle wicks, candle, just use everything in every time frame. And it's going to make those levels that you identify 10 times stronger when they all just mesh together beautifully. Takes a little bit more time, but you can have more confidence with your levels of support and resistance. So that was our lesson today on support and resistance. You know what it is, why it's important, the different types of support and resistance, and how we identify key levels of support and resistance, and how you eventually will start to nail these levels to the penny. Those dip buys, right? Or those sell targets. You will identify these levels to the penny.